Hi, thanks for tuning in. This is the ASX and Sectors weekly chart analysis for the week ending 21st of November 2025. First chart is the S&P ASX 200 index, the XJO. This is the parent index. You can see price closed lower this week. It's pretty much confirmed the breakdown. And you can see that last week price dipped below the lows of the range in here and threatened to break down. And this week has pretty much confirmed the breakdown, with price moving lower with a decent spread. Volume remained about the average. This is genuine trading. There's nothing hidden in there. Here's where the market pulled back to. This is a test for supply here. This is a little push higher. It's not a particularly strong area to find support in here. This is the stronger level just here. And then further levels come through in here like this. I would class the level we're currently at as a minor level and not a particularly strong level. If you remember from last week, this market was leading on the way down, whereas the mid-cap sector, which often leads itself, was reluctant to move lower. This market was really being pulled lower by the financial sector to a large degree and the real mega caps in the Australian Stock Exchange. And those mega cap stocks are not constituents in the mid cap sector. If we flip across to the mid caps and have a quick look, you'll see the difference. This is the mid cap sector. You can straight away see that price hasn't even broken down. And here's the lows of the range coming through here. You can see the market didn't pull back to this level 2 weeks ago. Last week was an absorption type bar within the range of the previous bar. And this week, the market's shown a reluctance to move lower. The thrust lower was very minor indeed. This wasn't a market that was looking to break down. This was a market that was reluctant to break down. And that's probably reflecting the broader Australian Stock Exchange. The parent index is reflecting the large mega caps to a large degree, the big four banks, the large miners, etc., one or two healthcare stocks. And they're looking quite vulnerable, whereas this market is a broader based market. This is the bottom 50 stocks in the ASX 100 index. And this market's attempting to hold on. It's reluctant to move lower. It'll do so if it's forced to, but it's reluctant to move lower. Next level is just here. Last to there. This is the range in here. We've got another level just below that. In there like that. That's the level there. There's a broader level in between. They're overlapping levels to some degree. So this market is reluctant to move lower. And it probably reflects the broader Australian market, whereas the parent index is reflecting the mega caps to a large degree. The small ordinaries sector, and this market has pretty much confirmed the breakdown this week. Here's the highs of the range. This is where the market could have found support. This is the first breakdown line. Price broke down below that, attempted to hold on, and then this week the market's confirmed the breakdown by moving lower. And the constituents in this market are the bottom 200 stocks in the ASX 300 index. So I expect this market is drifting lower. There's a good support level through there. There's a minor support level through there. This is where the market's come back to. This is very similar to the level that the parent index has pulled back to. And I would call that a minor level as well, not a particularly strong level. This is a stronger level. You've got another level coming through here within the range of this congestion here. Kind of like that. We'll keep flipping through. This is the financial sector, which is leading the way lower and dragging the parent index lower to a large degree. Here's where the market pulled back last week. You draw the lows of the range on either of those bars, really. I generally go with the most recent. Price was threatening to break down last week. It wasn't a clear breakdown. This week has seen further downside follow through and pretty much has confirmed a breakdown. Prices moved past this last gasp level and closed clearly below. It'll be quite difficult for the market to recover in the near term here. The little close off the week's low does suggest there was an element of support right down near the week's low. Volume was about average, so it was genuine trading. So there was a minor attempt to support the market. That may see the market attempt to recover next week up like that. It will need to be a strong recovery or it will just fail again and then push down low like this. A break below this week's low would then confirm the breakdown here at this last gasp level and suggest the market is going to move lower. You've got some levels down here that the market can move to, which would be relatively strong. Minor level here. That's probably where the market came to this week, to a large degree. Moving on. This is the metals and mining subsector. This is effectively the miners. Highs of the range coming through here. The market's been attempting to hold on. You've got a level that goes through there, which is the equilibrium level, and we'd call that the lows of the range. This was a dip below the lows on quite low volume. So there's not a great deal of substance in there. The market's flirting with those lows, but it hasn't clearly broken down. It's threatening to break down. It hasn't clearly broken down. We'll have to wait and see what happens next week. Next level below comes through there with a minor level just below. When we were initially watching this market, this was the level we were looking at for the attempt to break out, test of the breakout, and then push higher. So if the weakness does continue, you'll probably see the market moving back towards this level, the 6,000 level, where there should be some sort of reasonable support drawn out. Onto the gold sector now. The gold sector traded lower this week, but it traded inside the range of the previous bar on reduced and below average volume. The selling pressure was pretty moderate. Remembering we've got in the background here these two supportive bars and an up bar in response to confirm the support that emerged. Lows of the range through there like that. So the market really just pulled back within the range of the previous up bar this week on low and below average volume. That wasn't a particularly weak bar at all. That was an absorption type bar. And if the underlying, the price of gold, does rise, you'll see this market rise along with it pretty comfortably. There's certainly a reluctance to move lower. Price could have moved below the previous bar's low this week and tested the lows of the range, but it sat up high because there was enough demand in the market to keep price sitting up a little higher and within the range of the previous bar. So that was a pretty good result in the end for this sector. This is the energy sector, and it did pull back this week and close below the lows of the previous bar. It's always a minor negative. It's never particularly serious, but it's a good measure of whether a market is slightly positive or slightly negative, and the close below the low of the previous bar does suggest there is some weakness around. The volume was below average still. It remained below average for the last 3 weeks. We've got the level through here, which is where the market showed a reluctance to move lower and then recovered the lost ground in a buy the offer sort of fashion. And the market's pulled back to that level this week. So we'll probably see some testing for supply in here around this 8,500 level on this index, and just see how much support this market can draw out. At this point, the weakness is only moderate. The low and below average volume suggests that activity isn't particularly high and prices really just drifted lower on a lack of demand rather than any really serious active weakness. This is the healthcare sector, which has seen a real roller coaster ride more recently. We did suggest last week that we might be seeing the first signs of an accumulation in here. We did suggest that there was one happening back here, but that failed when price broke down here, secondary breakdown. Prices moved down. The market's attempting to find support again. Last week's bar, although it looks a bit weak, was on increased and right up to the average volume, may even have been a touch above average. And on that, the market sat there with a very narrow spread and let the supply come to it. If that was really serious, overwhelming selling pressure, this market would have really accelerated lower last week, or at least this week in response. And instead, last week sat there and closed adjacent to the previous close. And this week you've effectively got a test for supply on reduced and below average volume. It would appear that selling pressure in this market has eased considerably. I expect the market will probably continue sideways for a period. If there is an accumulation beginning, the accumulation will want to be done at the lowest effective price possible. So there'll be no serious attempt to push the market higher here. What you'll find is there'll be a sideways pattern of up a little and then down, up a little and then down, as the market attempts to draw out supply and absorb it, building a position. See how we go. We thought that was happening up here for a period and it failed in the end. So there's always risks involved in buying into a potential accumulation because there's no commitment by traders yet. They're happy to dump if further weakness emerges for whatever reason. And we'll just follow it for now and see how it goes. The ASX industrial sector closed lower this week, effectively confirming the previous breakdown. Here's the lows of the range through there. We've been marking that level as the market was moving higher. Now that we're breaking down, we'll keep hold of this level. This is the last gasp lows here. You can see that's where the market's moved back to this week. I expect there'll be an attempt to support the market through here around the 82.50 level. The market can't hold on there. It's probably coming back to this sort of price in here, into this zone here at 77.50 or thereabouts. So a breakdown here would certainly see some weakness potentially emerge. I'm expecting there'll be an attempt to consolidate here, and at least an attempt through here like this. And then we'll see just how strong any support in this market truly is. This is consumer staples, and price continues to move sideways. There hasn't been any serious downside follow through for some time now, and the market is clustering closes in here like this. This can often be a sign of accumulation itself in here, with clustering of closes like that, with the market not supporting pushes higher. And when the market pushes lower, it's unsupported. You can see on that push lower, that volume was reduced and below the average. I expect there'll be some resistance up here at the 12,000 level in this sector. And the market does seem pretty comfortable here moving sideways around the 11,750 level. This is consumer discretionary. Price moved lower again this week, but you can see that spreads are narrowing as price pushes lower. This market's beginning to show a reluctance to move lower. Here's the breakdown here. We saw a breakdown up here. But here was the initial breakdown, attempt to recover, failure, secondary breakdown. Now we're seeing a reluctance to move lower, pretty much as price moves adjacent to this period of bullish absorption in the background. We've got a stronger level through here, which will probably last down to this sort of area. Spread did narrow considerably this week. Volume reduced to about the average. So there was still decent volume going through. It wasn't as though activity was really low. And on that, spread narrowed, closed slightly off the week's low. That suggests there was some buying support in this market. It may have been just minor buying support, but it was at least enough to keep the spread narrow. On that volume, if it was all weakness, you would have seen the market move considerably lower with much more intent, and that wasn't seen this week. So there was some buying support in the market. This is the property sector. It closed lower this week, but it did respect the previous bar's low, and it held on. This market's showing a reluctance to move lower as well. Here's your breakdown line from the highs of the range up here. This is where we saw the initial weakness emerge. This was an attempt to neutralize the weakness. The market held on for a period, threatened to break down, confirmed the breakdown, and this week the market is attempting to hold on. It's reluctant to move lower here. Here was where previous support had been found in the background. The market's really attempting to hold on to that. It held on to that level last week, and this week it's shown a reluctance to move lower. And it's used the previous bar's low as a bit of support. We'll have to watch this next week and just see if the market can hold on and push back above this level and just hold on at this 1800 level in the sector, or whether there is downside follow through and price will probably have to come back to this sort of level in here if it really does break down again and push lower. Back down to the parent index again. You can see how this market has been dragged lower by those weak markets. That's the small ordinaries broke down like that, confirmed the breakdown. There's a financial sector confirmed the breakdown. Most of the other sectors all held on pretty well. But the parent index certainly did confirm the breakdown this week, and spread remained a little above the average on average volume. This was genuine trading. It's mostly reflecting the weakness in the financial sector, I expect. It's held on to this minor level this week. I think this level here will be stronger. You may see the market move down to that level if the weakness continues. This market does reflect overseas market trading to a large degree, and the overseas markets, in particular the US, really did show supply being drawn out this week and overnight last night in particular. So we'll just have to see how that continues as well. If those markets are weak, it doesn't matter how strong our local market is, it has to some degree, reflect overseas trading. It's just too expensive to sit in the market and try to maintain a level if there's supply being drawn out, and that supply being drawn out because overseas markets are moving lower. It's too expensive. What generally happens locally is the local professionals get out in front of the weakness and push price even lower than it needs to go really, and then the market can attempt to recover when the overseas markets show signs of recovery. And that's why our market really does push significantly lower after what sometimes appears as just average sort of weakness overseas. Our professionals prefer to get out in front of the weakness, overshoot the lows, and that gives them some period to accumulate into. Once it becomes obvious, we're going to move higher again. So just be aware of that. If the weakness continues overseas, our market's likely to stretch lower. Okay, thanks for your time. Back again and see what happened next week. Thanks. See ya.